Let's take the discussion on markets and the fundamental side forward with Mark Matthews joining us, Head of Investment Research at Julius Baer. Mark, morning. Thank you so much for your time. Now, May is likely to be a very hectic month, full of data points, especially global mixed data points coming out of US. Here we're already looking at progress of monsoon, earnings and polls. What is your current positioning as far as Indian markets go?
Well, we've been bulls on India for, I guess, around 2 years now, and there's no change to that view. Of course, emerging markets are often slowed down by a stronger dollar, and we have had a stronger dollar up until a couple of days ago. But I think the overriding that is the strong earnings growth in India, and the fact that it's the domestic investors who are deciding the direction of the market much more than in the past when it was foreigners who would be held back by investing in emerging markets because they were worried about a stronger dollar. So I feel same as I felt 2 years ago, that it's still a good market.
Okay, so that's a verdict coming in. Have been bulls on Indian markets for the last couple of years. But Mark, do you think the texture of the market is going to change a bit with the outperformance now coming in perhaps from the banking majors towards the end of the year? Or do you think with the kind of headlines that we are seeing from the RBI and the kind of glitches, unfortunately, that we have seen in the system, it's going to be a long drawn winter for the banking space, private banking particularly?
I don't really understand why banks have underperformed so much, so I can't answer that question. But I would say that I don't see any banks in Asia, central banks, cutting rates very much until the Fed does. In fact, Bank Indonesia just raised their interest rates yesterday. So the sticky inflation in the US will push back rate cuts globally, I think, into the latter part of this year. But I don't feel that's enough to really dramatically change the trajectory for the market. I still feel, as I said, that overriding everything else is strong earnings growth.
Right. Mark, the other big trigger, of course, I guess, for India is also going to be the elections, right? We're already in the second phase of polling, which kickstarts today. How big a risk factor, how big an event you think it's going to turn out to be? Or you think a continuity of the current government is well in the price and a fair assumption?
I originally was thinking that a supermajority, in other words, upwards of 370 seats or even 400 seats, would be very bullish scenario because it would allow for significant reforms like labor and judiciary and land reform. But I'm increasingly thinking that those aren't really something the market is pricing in now. So if they happen, of course, it's very nice. But if they don't happen, I don't think that we're going to get a big fall. And I think unless, there's a truly very unexpected outcome like, 330 or below, the market will take the elections in stride. And really what all the reforms that have been happening over the last few years, there's so much more work to be done with those that will result in material improvements for the economy that I don't worry that much that more reforms are needed to make the market go up. I think there's so much that has yet to be done in terms of the reforms that have already been committed to.
Mark, I want to talk to you about within the lending universe. Of course, there are these true blue chip banks, the private ones, and of course some of the large PSU ones. But there's a rising, emerging lender universe, which is technology-backed NBFCs. Bajaj Finance, of course, is the leader out there, but some more names like Piramals, like Poonawalla, many others are also coming in. Have you looked at this part of the lender universe? Does it interest you?
I'm sorry, I have to be honest, I haven't looked at it.
Okay.
Colleagues of mine would have, but not me. But if I may say that I think the mid-cap space is still a very good space, and I believe the companies you're talking about would probably fall into that cohort. So there's lots of growth, including in the financial sector for up-and-comers. Yeah.
There's also, you know, a kind of a big following now coming in for Indian commodity producers, be it aluminum companies. Novelis, there's a special situation building, the Aditya Birla Group company. What is your take on metal and mining companies and commodity producers here in India?
Once again, I'd have to be honest that I haven't studied them for many years, so I better not comment. But I would say that there's interest in the metals globally if inflation persists and China, the economy starts picking up again, which I think is misplaced. I think there's ample supply of industrial metals globally. And I don't think that the growth that's going to come out of China will be so dominated by the infrastructure investment that it had been in previous years, which necessitated a lot of buying of the industrial metals in China. So I wouldn't view that as a long-term place to invest in.
Mark, what are your thoughts on the way US data is coming out? Dollars rallying, dollar index in particular, bond yields over there have been elevated, and the mixed data, the PCE data has been high. Appears that inflation is sticky. GDP has been weak and strong. Previous quarter was strong. This one is weak. How will it impact flows into emerging markets in your view?
It might even help flows into emerging markets if people start to think that the U.S. is facing some kind of deflation, but stagflation. But I don't think it is specifically on the GDP number. If you take out trade and inventories, which are very volatile series, the number would have been 2.8%, not 1.6. So I feel that that particular quarterly GDP was an aberration and not the beginning of a new trend. And as for the PCE, well, we'll have to see when the March number comes out tonight. But the CPI number for March, if you once again looked carefully at it, was driven by auto insurance, strangely, but because it was up so much, it did have a material impact, which I do not think is going to be a long-term problem because it's not a big part of the basket. And then shelter, in other words, real estate. But that, I think it's very clear that due to the lagged way that shelter appears in the inflation baskets, we know, looking at the real prices of rentals in the United States, it'll come down in the months ahead. So I'm actually not worried about a pickup in inflation again. I think that will prove to be a red herring.
Point taken. Mark, which are those big overarching themes that excite you about India right now? Is it the affluent India that people have been talking about, the premiumization wave, or do you think the next leg could perhaps come from the tier 2, tier 3 cities, the mass consumption, because it's well overdue?
Well, to me, absolutely, the consumer is important, but I view the market more from the perspective of the rise of the middle class simply means that more money will be flowing into stocks. And as I'm sure you know, only 5% of household wealth is in stocks currently. And then gold, I believe, is something like 50%. So I think that Indians understand that they have a good stock market, and frankly, they should be very happy about that because most stock markets in Asia are not good performers, but India's is. And so as the middle class grows and more money goes into stocks, then I basically just like stocks in India in general. And I'm not thinking so much about, well, the middle class is getting bigger, so I should buy consumer stocks. I just think stocks, period, in India will go up as people become wealthier and put more money in the market.
All right, Mark, thanks very much for joining us on the show today.
If you like this video, then like, share and subscribe to ET Now.